purpose of those sanctions is to deter Russian aggression. And so if they're triggered now, you lose the deterrent effect.
You claim that we're planning, that we intend to attack Ukraine, even though we have said many times that this isn't the case.
Things are looking good. We don't want to get overconfident, but they all look like they're going in the right direction right now.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Fears of escalation. The U.S. orders family members to leave its embassy in Ukraine as tensions with Russia intensify. The focus for the markets turned to Fed tightening. The meeting this Wednesday is set to signal a March liftoff in rates and a balance sheet reduction later this year. Plus, the crypto crunch continues. Bitcoin is down around 50% from its peak. Now, first thing is first, let's check in on the markets. Interesting to see a tale of two markets. So first, futures are actually getting a lift over in the U.S., but European stocks accelerating their decline here in Europe, down some 1.2%. This on the back, of course, of the Fed. Goldman Sachs upping the number of interest rate hikes that they're expecting, or certainly saying that the market could be mispriced when it comes to them, because we could see even more than they're expecting. And then the corporate story of the day is, of course, Unilever getting some 5.7%. The dollar index, a good way of looking at risk and political, of course, geopolitics with Ukraine, and Bitcoin $35,000. Now, if you look a tale of a couple of cities, let's get straight to the European map. And if you look at Boris Johnson, he's going to have a tough week. It could be a make or break for the UK Prime Minister. And then there's that presidential vote that also starts in Italy with Mr. Mattarella, the president. It is, of course, a role that's largely ceremonial. It's not like the president of France or like the US, but still an important role, especially if they take Mario Draghi, that then will no longer be Prime Minister. So the US has told family members at its Kiev embassy to leave Ukraine. That's as the State Department warns President Putin could launch an invasion at any time. Now, Russia's benchmark index is lower today, despite the Russian president's repeated assurances he has no plans to launch an attack on the country's eastern neighbor. Now, we're joined we're in Washington by Elizabeth Bross, senior fellow at the American Enterprise Institute, where she focuses on emerging national security challenges. Elizabeth, thank you so much for joining us today. First of all, is there a timeline by which, if nothing really happens that's aggressive from the Russian side in Ukraine, that we could say they're not as, likely to do it in February? Or does the timeline vary and is it fluctuating?
So the perceived wisdom is that any aggression or any invasion, I should say, by Russia into Ukraine would have to happen very soon, because then the weather conditions change and become less favorable. And also NATO and its partners could become more united. At the moment, they are pretty disunited, and the weather conditions seem to be favorable for an invasion. So that's why many people are predicting a move soon by the Russians. But of course, they could equally just stay at the border and continue to harm the Ukrainian economy, which is what's happening at the moment, because international money markets and investors are worried about an invasion and as a result are pulling their money out.
So, Elizabeth, we also understand that the Russian parliament is debating this week whether to recognize the independence of two secessionist regions in eastern Ukraine, where in the last few years, 500,000 people were given a Russian passport. I mean, this is underreported. Does this change what they're going to try and do in Ukraine?
It doesn't significantly change their plan for Ukraine. They are these two semi-independent republics are Russian under Russian control anyway. So, for example, there are no consular services provided by the United States to U.S. citizens who would like to go there, simply because it's not recognized as Russian territory and it's too dangerous to try to operate consular services there. So nothing much will change with that move. But of course, it is further confirmation that Russia has intentions to make this permanent.
When do you think we'll know what the intention, if at all, by Russia is? Will we really ever truly understand the end game?
We won't. And I worry that our complete focus on the risk of a Russian invasion of Ukraine takes focus away from other things that Russia could do. For example, what is already happening with the Ukrainian economy, which is languishing as a result of the threat of an invasion. And for example, Russia can continue to launch disinformation against attacks against Ukraine, to continue to launch cyber attacks against Ukraine, to weaken Ukraine in other ways, and by the way, also to weaken other countries in other ways. And so if we stare at the risk of an invasion without considering other alternatives, then I fear we'll be surprised by a Russian move in a completely different area, maybe completely against a completely different country.
Elizabeth, what is the one thing that you think we're misunderstanding about this? Is it negotiating? Does the U.S. need to be tougher or easier on Russia to get what they want?
I think that the big thing we're misunderstanding isn't always just focusing on one thing, as I mentioned, but it's also extremely difficult to get Russia to act differently when it hasn't really done anything yet in recent months that is a clear breach of international law, international norms. Yes, there has been a war in Ukraine, in eastern Ukraine, since 2014. Russia annexed Crimea in 2014. But since then, nothing much has changed. So there isn't really a point where the US and its allies could say, well, now we have to intervene against Russia. So it sort of has to sit there and try to prod Russia not to do anything more aggressive. But I think maybe the most important thing we're misunderstanding is to always assume that Russia will do what it looks like it will be doing. For example, after it annexed Crimea, everybody said, oh, now it's going to annex parts of Estonia next, part of Latvia next. And it did something completely different, meaning an intervention in Syria. So I think that is the big thing we need to pay attention to. What are the surprise moves that Russia could think up? And we have to think a little bit like the Russian leadership, I think.
Elizabeth, do you think there's a link that if Russia actually starts a war in Ukraine and gets away with it, then China goes after Taiwan?
There is such a risk. And the challenge there is that, well, at the moment, China is watching extremely carefully what Russia is doing, but especially what we, the West, are doing. And our lack of unity doesn't help. And if we signal that we are that we don't have a united front, that we don't really have a good idea of what to do if Russia were to invade Ukraine, or if Russia were to do something aggressive short of an invasion, then that signals to China that, oh, they are really disunited and they don't really have a plan. And they especially don't have a plan for countries that are not NATO member states. So it's a very perilous moment. And we in the West are so used at showing our divisions to the world simply because that's how liberal democracies work. At the moment, that's not working in our favor. In fact, it's working against us.
All right, Elizabeth, thank you so much for all of the insight. Elizabeth Brother, Senior Fellow at the American Enterprise Institute. Now, sticking with our top story, we'll be speaking to the Ukraine ambassador to the UK. That's after 10 a.m. right here on Bloomberg TV. Coming up, the focus for the markets turns to Fed tightening. The meeting this Wednesday is set to signal a March liftoff in rates and a balance sheet reduction later this year. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. On pre-market, we have a nice rise for coal, rising from 26% in pre-market. This is because over the weekend, we understood that the department store Kohl's in the U.S., very big in the U.S., fielding interest from two suitors at the same time, and that it's grappling with multiple activist investors pressuring it to sell. So you can see quite a nice little upside if you bought into the stock last week, gaining some 25.5%. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Biden's chief medical advisor says the latest COVID wave may peak soon, with infections declining sharply in the U.S. Northeast and Midwest. However, Anthony Fauci warns the turnaround will not be uniform, with some states still seeing rising cases. Now, the UAE says it has intercepted 2 ballistic missiles launched by Yemen's Houthi fighters, marking an escalation in a conflict that has largely left the Gulf state unscathed. The country's defense ministry says shrapnel fell over scattered areas of Abu Dhabi without causing loss of life. Last week, Iran's backed Yemeni fighters launched drone strikes on the UAE that caused a deadly fire outside of Abu Dhabi. Italian media mogul Silvio Berlusconi has abandoned his bid for the presidency ahead of voting. His decision strengthens the prospect that Prime Minister Mario Draghi could be elected as head of state. 85-year-old Berlusconi announced his decision in a statement, saying that Italy needs unity to combat COVID and that he wants to avoid his name triggering any division. And China says a month-long lockdown in Xi'an has been lifted after a COVID outbreak was stamped out. Shops, supermarkets and restaurants in the city of 13 million people have now been permitted to resume business. Beijing, meanwhile, is requiring anyone who buys anti-fever medication to undergo a COVID test as it tries to root out undetected infections just days ahead of those Olympic Games there. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, as we look ahead to the Fed's next policy meeting on Wednesday, some investors are pricing in more rate hikes and forecasts. Goldman Sachs' base case is 4 rates increase in 2022, but economists led by Jan Hatzius also see upside risk for more. Now we're joined by Holger Schmieding, chief economist at Berenberg. Holger, thank you for joining us. We have a number of questions. I'm going to ask you about Bitcoin, so stay tuned in a couple of minutes. But actually, it's all about the Fed, and what the market could be mispricing is what is the origin of inflation? And if it's not on the supply side, or if it is on the supply side, then why does it make sense to have 4 even more interest rate hikes this year?
Well, in the US, the origin of inflation is both on the supply and the demand side, which differs from Europe, where we only have this supply constraint and special effect inflation. In the US, indeed, the Fed is behind the curve. They should have been leaning against the quite aggressive fiscal policy earlier. And so as a result, they will have to do 4 rate hikes, 25 basis points this year. That's our call, with a risk that it could be slightly more. But all of that would only be designed to bring the economy to a speed that is sustainable, not to slow down the economy below trend.
Holger, what does it mean for your expectations, actually, of what the Fed does and the impact on dollar?
Well, I think that most of what the Fed is going to do is priced in. We expect 4 Fed rate hikes this year, 4 more next year, and then 2 further in 2024. Markets have moved a lot. So for dollar-euro, we will likely see that markets may, with a bit of wobbling, price in roughly the rate hikes that we expect. Whereas for the ECB, later this year, markets will focus on when they start exactly in 2023 to raise rates. So I think most of the dollar positive news from the gap between Fed moving early and the ECB waiting a year longer, most of that should be roughly priced in, so that by the end of this year, we may actually have the euro slightly less low than it is at the moment against the US dollar.
Holger, what do you think is the most, idiosyncratic, interesting thing that's happening right now in the markets? I don't know whether we're mispricing the Fed or whether it's what China does in terms of trying to stabilize the economy.
I think there is too much concern about what Fed interest rate hikes and the rising yields that we have seen early this year actually mean for the economic outlook, for company earnings and for valuations. All of these things, Fed rate hikes and somewhat higher yields, are only a reaction to an economic backdrop that promises to be good for companies, which is solid demand-driven growth and inflation, to some extent, staying a bit higher than the Fed expects. But this inflation will likely bring the Fed only to move rates towards more normal, not to step on the brakes and slow down the economy harshly. So I think concerns that less depressed yields and more normal central bank rates would be very bad for equity markets after some wobbliness. These concerns are probably a bit overdone.
Holger, what is the one thing that actually you worry about in Europe? So we have the Italian election for the president, which could mean that Mario Draghi could get it, and actually it's out. We have Ukraine and a possible war really brewing at the doorstep. Apart from the human tragedy and the consequences of such an invasion, we also get energy prices. And then we have, of course, the story in the UK. What will 2022 bring for Europe?
Well, 2022 will bring news on all these issues for Europe. The one thing, however, that I'm most looking at for the outlook, say, beyond this month is supply chain issues. And that is especially now Omicron in China. We've seen the PMI releases this morning for the Eurozone, signs of a further easing of supply constraints. But if China, in pursuit of a probably futile zero-COVID strategy, were to impose new lockdowns whenever Omicron breaks out, then we could have the supply chain disruptions lasting for significantly longer, and that could dampen the economic outlook for Europe more than Omicron, which, as we are seeing in the UK, is bad for a while, but may, after peaking, then recede strongly, something which in the Eurozone will probably happen at some time in February. So I'm watching China, and of course on geopolitics, I'm watching Russia. If Putin really is stupid enough to ruin his economy in the long run by invading Ukraine and triggering serious Western sanctions that would not immediately hurt Russia, they have reserves, but hurt them quite badly in the long run.
Holger, thank you so much. Holger Schmieding, their chief economist at Berenberg, staying with us. Now, coming up, an easing of supply bottlenecks is helping drive manufacturing activity in Europe's two biggest economies. We'll discuss the region's recovery next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is a picture overall for some of the Russian assets, given what we've seen in geopolitics, with the rhetoric also from the U.S. really escalating. Now, Russian ruble at 78.30 to the dollar, and then this is the Russian index down some 4.5%. Now, plenty of PMI readings out this morning, including from France, Germany, and the wider Eurozone. A nascent easing of supply bottlenecks is also helping drive manufacturing activity in France and Germany. That's partially offsetting the drag from tighter restrictions linked to a surge in COVID cases. While Holger Schmieding, chief economist at Berenberg, is still with us. Holger, I know we touched a little bit on some of the risks looking at the European economy. What can ECB do to placate it?
The ECB cannot really do much about it. These are things outside the ECB's control. The ECB has to focus on the longer run picture. And the longer run picture is that supply constraints will likely ease, even if we get a bit of a Chinese interruption in that process. And the longer run picture is that demand is solid. We have pent up demand from households, from businesses. Governments want to spend and invest more. All the big programs that were passed in recent years, even in Europe, most of the money is not yet spent. So for the ECB, it should look through the short-term risks. It should reassure markets, investors, and economies that if short-term risks were to materialize badly, they would intervene. But basically, the ECB should focus on the longer-run outlook and gradually prepare the ground for rate hikes. I think they should happen late this year, but the ECB will likely wait until at least early next year.
Holger, overall, commodities can really spike if the crisis in Ukraine escalates. Can the EU do anything to protect themselves against that?
Well, not much short term. Governments can, of course, help households with subsidies to cope with higher energy bills. We have been trying in Europe for a while now to increase the deliveries of liquid natural gas that we are getting from outside. We could release reserves. So there are a few short-term things that can be done, but by and large, we just have to see how this plays out. There is nothing that the European Central Bank could really do about this risk, but reassure everybody if something really goes wrong, we'd intervene to, for instance, prevent clogging up in financial markets. And otherwise, governments need to help households, if necessary, to cope with a potential further spike in energy prices. Let's still knock on wood and hope that we don't get there.
Holger, overall, there's also, of course, the politics story in the UK. Does that change if Boris Johnson were to go? Does it change the composition of the UK economy?
That would probably not change the composition of the UK economy much, but if we have a less erratic Conservative Prime Minister with similar policies, but none of this brouhaha of Johnson, then probably markets would see that as a positive. That could actually lead to a slightly stronger sterling and to stronger UK markets relative to what we currently have, namely an erratic Boris Johnson fighting for political survival, with the risk that in this fight for political survival, Johnson may throw out one weird idea after the other, or may even start a new conflict with the EU. So a leadership change in the UK would probably be seen by markets not as a negative.
I mean, it's quite funny that you call it just a weird idea after the other. Holger, never dull and always punchy. Holger Schmieding, their chief economist at Berenberg. Now, coming up, it's also never dull. Italy begins its presidential election today with the Prime Minister Mario Draghi as a top contender. We'll have plenty more on that. Equities in Europe declining as a rout in technology stocks deepening amid concerns over the Fed's imminent rate liftoff. This is Bloomberg. Fears of escalation. The U.S. orders family members to leave its embassy in Ukraine as tensions with Russia intensify. The focus for the markets turned to Fed tightening. The meeting this Wednesday is set to signal a March liftoff in rates and a balance sheet reduction later this year. Plus, the crypto crunch continues. Bitcoin is down around 50% from its peak. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So let's check on the markets. If you look at the S&P 600 here in Europe, the focus firmly on the downside. It's interesting to see a difference between what European stocks are doing. They're down, and this is as the rout in technology stocks are deepening amid concerns that the Fed's imminent rate liftoff will actually reprice a lot of stocks. And then U.S. futures actually pairing some of their advance, but I think they're still in positive territory, and that's after they stirred tentative hopes of some respite after one of the worst stretches for global shares last week since the pandemic began. Unilever gaining some 6%. This is on the back of an activist shareholder that's urging maybe Unilever to also break up the company, and Bitcoin 34,740. Now, we also watch UK January Manufacturing Pmi coming in short of expectations, 56.9 instead of the forecast, 57.6. And you can see sterling at 135.34. So Italy starting its presidential election with the Prime Minister Mario Draghi in pole position. The papal-style vote to choose a new president sees Draghi touted as a top contender. Now that's as 85-year-old Silvio Berlusconi withdrew from the running. Now let's get all the latest with our Rome bureau chief. He's Alessandro Speciale. Alessandro, thank you so much for joining us. So what's expected from the vote this week? I know we're not getting much today, but could we have a new president in charge by Thursday?
By Thursday might be a bit optimistic. We had former Prime Minister Renzi saying that we'll get one by Friday, and that also looks a bit optimistic. Why? It's because parties are completely divided. Draghi probably remains the top contender, but parties are trying to install one of their own, and especially they are trying to find out who will replace Draghi if he becomes president. That's the real source of instability right now.
Yeah, and Alessandro, it seems that actually Mario Draghi's chances of becoming president has really increased. What does it mean for, who becomes prime minister if he does get the presidency?
It's difficult to say if they have increased. In fact, the noise right now in Rome is that, for example, Salvini, the leader of the League, has said that Draghi should remain as prime minister. The fact is that maybe no party, none of the politicians in Italy want Draghi as their top candidate, but he is probably the second best for everyone, and is definitely best. And given that in Parliament no one has the numbers to elect one of their own, this is why Draghi's candidate still has mileage, especially after Thursday, when the threshold to be elected is actually lower.
Alessandro, thank you so much. I know you're going to have a busy week, so get some sleep when you can. Our Rome Bureau Chief, Alessandro Speciale, there with the very latest on Italy. Now, we're also joined by Professor Andrea Principe, rector of Lewis University in Rome. Professor, thank you for joining us. I mean, it's really crunch time for Italy. I know for our international audience, it's good to remind them that Italy and the president has gained a lot more power in the last decade, but it's still, of course, not the president of the U.S. just because of the function, because he's not head of government. Professor, what are you expecting in this rate, and what does it mean for Italian reforms going forward?
Well, this is a very challenging time for Italy because, as colleagues from political science tell me, the presidential election is a kind of nested games because if Mario Draghi, becomes is being elected as president, then drags with it the premiership is going to be the new premier. At the same time, political parties have been discussing issues regarding the electoral system. So really there are few games being played at the same time in a landscape where we have geopolitical pressure, which results often, as we're seeing in the increase in energy cost, and being Italy a large manufacturing country, the second largest in Europe, in fact, does get hit by this geopolitical dynamic. So very challenging time. We do hope that we can snatch this opportunity to turn the challenges into real opportunities. So lay the foundation, thanks to the funding available by the PNRR, the foundation for a new institutional framework.
And Professor, I guess the million-dollar question is whether the stability that we've seen in Italian politics, which hasn't lasted very long, for the moment it's been like 12 months, but certainly international investors and the international community thinks this is a Draghi effect, and frankly, that he could walk on water and do no wrong. But is that stability also felt in Italy, or are we underestimating the fact that, Italian politics could almost not survive without Mario Draghi?
It is very well perceived and in Italy across the board by the firms, the industrial system, by the university system, by people at large. There's a kind of wind of optimism that is affecting Italy right now because of the stability, in a way, created by the Draghi government, which is apparently predicted to last. 2021. We enjoyed a 6.3 increase in the GDP. Now the forecast are for about 4% for this year, 2022. So stability is well perceived. I would like to have a stable political dynamic, which sounds like an oxymoron, but is fundamental for the Italian recovery and resilience.
What do you see as the main obstacles for Italy to try and overcome, the high growth, or to stay with the growth that we've had in the last couple of months?
I do believe that the real challenge is to work out the way we should spend the funding made available by the PNRR. So we have the opportunity to again create a new industrial system. There are discussion in and around Europe about the reorganization of the supply chain. There's discussion in and around investment in digital technology, which has become fundamental, and make sure that Europe and Italy become less dependent from the tech giants from US and China. So I think that if we're able to merge this optimism together with the opportunity created at PNRR, surely Italy can be on a surefire development path.
Yeah. Professor, as rector of Lewis University, one of the most prestigious and renowned universities actually in Italy, what do you need from the current government and from whoever replaces Mario Draghi if he goes to the presidency?
Well, to maintain stability and make sure that the investments they're going to be impact also on the educational system. We've been hearing and discussing a lot about the new profession and the new nature of jobs that are being played out after this pandemic. So a big and important investment in and around or along the educational filière is fundamental. This entails also redefining the vocational training system with the so-called ITS, Istituti Tecnici Superiori, but at the same time, a new asset, a new institutional framework for the for the university, which is fundamental to make sure that our young generation gets prepared to interpret and act upon reality.
Rector, very quickly, is everything back in the classroom, or are you still having to do virtual? And has that really set back the path of certain students?
Everything is back in classroom. We've learned how to use digital technologies, a digital environment to teach. So we're going to be exploiting this learning opportunity which we've been given by the pandemic. So now we are in an hybrid format, as we call it, which has allowed us to value, the presence, the in-classroom presence, but at the same time also the opportunity that digital technologies can offer us.
Thank you so much, Professor Andrea Principe, there, rector of Lewis University. Now, we'll have plenty more, of course, on the Italian situation with the presidential election. Also coming up, the latest on the Russia-Ukraine tensions, an EU ministerial meeting later today. That's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bloomberg understands Nelson Peltzer's activist hedge fund Trian has built a stake in Unilever over the past few months. It adds to pressure on Unilever CEO Alan Jope after he abandoned a bid to buy GlaxoSmithKline's consumer health unit. Trian has a history of pushing for changes at consumer companies. Now, the department store chain Coles is fielding interest from two potential buyers. Bloomberg has learned that the latest offer comes from Sycamore Partners, though it is unclear how much the private equity firm is willing to pay. Earlier, another bidder offered $9 billion for the retailer. And Suntory says wages will be raised above government guidelines at the company and across Japan due to an ongoing labor shortage. The CEO of the drinks giant also told us consumers are more likely to accept price hikes because of an inflationary environment.
I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, the U.S. Secretary of State, Antony Blinken, is set to brief EU foreign ministers today on the Russia-Ukraine tensions. That's after the State Department authorized a reduction in Kiev embassy staff and ordered the departure of their family members. Well, Blinken says allies will not immediately escalate sanctions on Russia for the troop buildup. Now, let's get the latest with Bloomberg's Europe correspondent, Maria Tadeo, in Brussels. And on the phone is Ross Matheson, our executive editor for international government. So thank you both for joining us. Maria, first of all, there's been a lot of talk about the need for a coherent messaging. What can we expect to come out of this EU ministerial meeting today?
Well, Francine, for starters, clarity on the sanctions. As you know, in December, European leaders agreed to massive sanctions on Russia if it were to invade Ukraine. The reality is, a month later, we still don't know what that would look like. And it's interesting that just a few minutes ago, European foreign ministers were entering the space you see behind me. A lot of the Eastern European countries saying we need clarity on that front. Sanctions is something that we need to focus specifically now on the details. The other thing, of course, is Germany. We've had a very embarrassing weekend for the German Foreign Service. As you know, a general, an army official, was caught on tape saying that Vladimir Putin deserves respect. He's now resigned ever since, but nonetheless, it's brought up all the ambiguities that we've seen for years between Russia and the German foreign policy. A lot of this, of course, will depend on Annalena Baerbock today and the message that she wants to portray. It's interesting that this morning she decided not to speak to the international media.
Interesting. Roz, I mean, following up on that, can we expect Germany to change its stance on weapons shipments to Ukraine from NATO allies? And what other support could the West offer Ukraine?
Well, so it's very unlikely that Germany will change its position. It's been that way for many, many years, and fundamentally part of the German psyche, arguably since the end of the war. So even though they're copping a huge amount of criticism, you can see that from other European nations gently, certainly from others online. You won't expect that that's going to force a change in German policy. They've been very clear for many years they will not ship even defensive military equipment to certain countries. They will not allow other countries to overfly their own equipment there. They do not want German-made goods going into these places. And even though that's perhaps from the outside harder to comprehend as the world has changed, it's still very much part of what Germany sees as important to its own identity. So you're seeing at the moment perhaps growing concern in Germany about that kind of criticism, but certainly no change of course is likely.
So, Roz, no change in course is likely. Talk to me a little bit about why we didn't see sanctions right now from the West. You know, are they actually deliberating the possible nuclear option, which is freezing Russia out of the SWIFT system, if something, you know, big were to happen?
Well, as Maria was saying, it's sort of core to the discussion today in Brussels, but we're not expecting them to get down to any specifics on sanctions. And that's because European nations are saying sanctions are not supposed to be a deterrent. They're supposed to be a penalty. So a country or an individual does something, they take an action, then you discuss sanctions and decide on them and move on them. Obviously, they would want to move on sanctions on Russia quickly in that event, but they're saying that's not what sanctions are supposed to do. It also, though, allows them to get past the fact there are real differences in Europe about how strongly they should sanction Russia in the event of an invasion, especially that nuclear issue of SWIFT and the financial system and cutting Russia out of that. European nations are much more exposed economically to sanctions on Russia than, say, the US. They're also exposed to the risk that the Russians might simply cut off gas to Europe as a retaliation. Yeah. So it allows them to sort of defer that conversation on those reasons also.
Yeah, and on, you know, from the market perspective, Maria, first of all, it's very clear that, you know, an invasion, even falling short of a full-on war, would put a lot of pressure on commodities. And then Ukraine exposed stocks. I'm looking, for example, at Ferrexpo, listed in London, but which mines iron ore in Ukraine, is falling quite significantly. So the market fallout from, you know, this huge possible geopolitics event is not to be snubbed at.
Yeah, and it's huge, Francine. If you look back at the invasion of Crimea and the illegal annexation of Crimea, that tipped Ukraine into default. Last week, we heard from President Zelensky trying to calm down the mood. A lot of this is a message to investors. We've seen the CDS really pick up for both Ukraine, but also Russia. The interesting thing, however, in Russia, and it goes back to what Ross mentioned about the sanctions, is that this is a country that has been preparing itself potentially for war. We've seen the reserves that are being held by the central bank go out. We've seen, or go up, excuse me. We've seen a real effort to move away from de-dollarization of the economy. And we've also seen a lot of internal financing from Russian banks. A lot of this designed, of course, to cushion the blow from this. And as you know, the political calculus here is this something that Vladimir Putin believes that the Russian economy can weather, and whether or not a political victory on the Ukraine tensions and a political win would, to some extent, compensate economic damage.
Maria, thank you so much. Our European correspondent, Maria Tadeo, and of course, our executive editor for international government, Ross Matheson. When I was also reminded by our Valerie, our queen of charts, that the ruble is the worst performing currency versus the dollar today. Now, sticking with our top story, we'll be continuing, of course, on Ukraine. We'll be speaking to the Ukrainian ambassador to the UK. That's right here after 10 a.m. on Bloomberg TV. Coming up, crypto crunch, a sell-off pushes Bitcoin towards a 6-month low. We talk what's next on the crypto roller coaster. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, selling pressure continues in the global crypto market after more massive declines in digital assets. Bitcoin has lost more than 50% from its all-time high in November. Well, let's bring in Eddie van der Walt from our Markets Live team for more. Eddie, first of all, I absolutely adore speaking crypto with you because you make us smarter, and there's also all these correlations about whether it's systemic or not that we really need an answer to right now.
Oh, yeah, absolutely. You know what? And I think looking at the crypto space, I think crypto came into the year saying, look, it's going to be great because we're more integrated in the financial system. More people are going to buy cryptocurrencies. Yep. More people, now have access. You've got ETFs, you've got the futures market and all of those things. But what that means is that crypto trades more like a traditional asset. It trades more like a tech stock. And that's what we've seen. When we see these drawdowns in tech, we see it really get, amplified in Bitcoin.
But Eddie, can you say that with certainty? Because there are also days where it doesn't really track tech stocks, right? So I feel like it tracks it like, what, 85% of the time?
Yeah, absolutely. But I mean, the correlations are getting stronger and stronger over time. I think right now, the correlation between Bitcoin and tech and the NASDAQ is at something like 0.7 measured over 30 days. Now, these things do vary, but I think right now, at the moment, sentiment in cryptocurrencies is dictated by tech stocks and the wider markets.
When does it become systemic? And is there a danger that it gets overregulated because people think it's systemic, or certainly the banks think it's systemic? Or is there a danger that it crashes without being regulated?
Yeah, there are places where it potentially already is systemic, right? If you look at Tether, Tether is a stable coin linked to the US dollar, right? Now, there's $60 billion worth of credit assets in Tether. If there is a run on Tether, that could easily spill over into the rest of the credit space. That means that, regulators are really starting to take a hard look at these things. But the relationship between regulation and the cryptocurrencies, the future is not clear-cut, because if you regulate it more, that means more people can get access to it. Yeah. And potentially in the long run, this could be positive for cryptocurrencies. So,
the correlation, and we've been trying to pin, for example, Goldman Sachs on this, right? The correlation between gold and Bitcoin and inflation, again, is there, but at times it's quite tentative.
Yeah, it's not. The correlation, it's not. The correlation between gold, right? The correlation between gold is weakly correlated to almost everything. That is what makes it a diversifying asset. People think that the market's going to sell off gold. Going to go up. This is not how it works, right? The gold trades kind of on its own fundamentals and off the dollar and off real rates and so on. And really, gold is almost a pure real rates and dollar play. Cryptocurrencies, on the other hand, is much more correlated with stocks. The two just are not substitutes at the moment. In the long run, it could become that way, right? That's Bitcoin's selling point. Someday I'm going to grow up to be gold, but right now I am not.
Someday I'm going to grow up to be gold. Someday I'm going to grow up not to be a commodity that gets sold off every second. On a serious point, so we're seeing moves in dollar, and this is, of course, 3 days before the Fed, and then we could have a huge commodity swing, depending on what happens in Ukraine with a possible Russian invasion.
Oh, absolutely. There's so much going on in markets. You just don't know where to look, right? And I think that's kind of what we're looking at today. We're seeing a little bit of stabilization in US futures anyway, not so much in European equities. But I think that's what we're seeing. There's so much event risk that people are saying, hang on a second. Maybe, there are some markets that are playing catch up, but the others are just saying, all right, we're going to have a look. We're going to see where we are with all of these event risks, and then see whether we're really trading risk off again this week.
So what do you think is most interesting in the market? So when I grow up, I want to be...
Copper, definitely copper. Copper is fantastic. I mean, copper is that green commodity that takes us into the future, right? Copper is that green commodity that I think we're at the end of the age of oil and at the start of the era of copper. I think that's what's coming.
Yeah, I love that, actually. Every time I have a big commodities guest, this is a disclaimer. I go to Eddie van der Walt and I say, Eddie, what's your killer question? And he's been saying that for a long time. It's that actually, can copper become what oil is today to the world?
You're going to make me blush, but can I just say your comments are always gold anyway. So.
Very good. It's almost like, he could write the Sunday Time tabloids. Eddie van der Walt, a blushing Eddie from our Markets Live team. Now, Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kailey Leinz in New York, or Anna Edwards in London. A full roundup, of course, on everything geopolitics, the Fed on Wednesday. And in the meantime, we're seeing this dislocation between European stocks under pressure, U.S. futures gaining. This is Bloomberg.
The Fed is focused on one thing, which is the evolution of the data.
I think that the Fed's going to take a very, very measured approach to policy normalization.
Going into March, I think there's more reasons to be a little bit concerned about turbulence.
We constantly try to find parallels. Is this 2008? Is this 2018? And I think the reality is this is 2022, and it's just very, very different.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Monday, January 24th. Our top stories today. European stocks are lower as U.S. futures pair gains. Investors worry about the Federal Reserve's imminent rate liftoff. Goldman Sachs says there's a risk that the Fed will tighten more than forecast. Preparing for the worst, the U.S. orders diplomats' families out of Ukraine because of the threat of a Russian attack. European foreign ministers meet with U.S. Secretary of State Anthony Blinken to discuss the next steps. And deal-making and activists are driving some stocks higher. Nelson Peltz takes a stake in Unilever. Department store chain Kohl's has a couple of bidders, and one investor wants to fire Peloton's CEO. Welcome to Bloomberg Surveillance, everybody. This is the early edition. I'm Anna Edwards, live in London with Matt Miller and Kailey Leinz over in New York. And of course, a big focus, Kailey, on the Fed this week. That will hang over everything we're talking about. That comes on Wednesday. But before we get there, it seems a lot to be worried about here in Europe, including the tech sell-off of last week, but also geopolitical risk.
Yeah, geopolitical risk, earnings, monetary policy, all going to be front and center this week, Anna. And honestly, it wasn't a great start to the week in Asia overnight. Mostly a lower session. You did have Japan and Chinese stocks higher, but broadly, the MSCI Asia Pacific Index was down by about 0.75%. And Hong Kong really was the laggard. The Hang Seng Index dragged down by technology in particular. The Hang Seng Tech Index down nearly 3 full percentage points, really following the losses we saw for U.S. technology stocks to close out the week last week, maybe playing a little bit of catching down in Asia overnight. Now, also away from equities in FX, I wanted to point to the Chinese yuan because we're seeing monetary policy getting easier in China, and yet the yuan just continues to gain strength. Right now, it's 632.67, which it hit overnight. It is at its strongest against the U.S. dollar, going all the way back to May of 2018. FX strategists pointing maybe to seasonal demand ahead of the Lunar New Year holiday, which is next week. And also next week is the beginning of the Beijing Olympics, and air quality is really in focus. In order to tamp down on pollution for the Games, Chinese authorities are ordering more output cuts for steel production in the steelmaking hub in China of Tangshan, which is just a little ways outside of Beijing. Less steel production means less demand for iron ore, Matt, and as a result, iron ore futures down about 3 percentage points in Singapore overnight.
All right, so it looks very risk-off in Asia. It looks pretty risk-off in Europe, too, although here in the U.S., we have S&P futures rising. At the same time, investors are buying 10-year debt. So, in fact, buying rates across the curve, and as a result, we see the U.S. 10-year yield down to 172.80. So seeking some safe haven in debt, it looks like, willing to bet on a bounce in terms of equities. NYMEX crude up again, 85.37 is the level here, but Bitcoin is down another 2.5%. It had kind of stabilized in the early hours of today's trade in the late session yesterday. Remember, Bitcoin trades over the weekend, but it's now back down 34,492. And the question is, where do we stabilize on the digital currency / commodity, Anna?
Yeah, and Matt, you mentioned the risk-off picture in Europe. Let's just put a little bit more detail behind that screaming red on the map here in Europe. To what extent is this Friday's story, and to what extent is this looking forward? There is a bit of Friday in here. We're seeing heavy selling of tech names here in Europe, and that reflects some of the late selling we saw on Wall Street, of course, during Friday's session. But I can also tell you that travel and leisure stocks are also selling off today. So there is a sense that we have a broader risk-off picture. This isn't just about tech names, down by 3.4% on travel and leisure stocks. And geopolitical tension is very much to the fore. Does Europe have more to lose on that front than other parts of the world? Certainly if we're talking about Russia here, and we've seen Russian assets very much on the move this morning. So down by 4.8% on the Russian equity market index. The Russian currency also losing ground. And just as Matt was saying that we're seeing a bit of a bid for 10-year treasuries, we're also seeing a bit of a bid for the German Bund as well. A little bit of safe haven being sought then in that regard. Let's talk about some corporates today. We've also got Unilever on the move. We mentioned in our headlines some activists, Kailey, that are really in the mix, and that's certainly the case at Unilever. One activist who's just recently been on the board at rival P&G, now taking a stake in Unilever. Will he push for quicker change at this fast-moving consumer goods company? And Axel Group, this is a fairly small business, makes bicycles over in the Netherlands. That's the subject of a KKR private equity bid, up by 24% in today's session then over in Amsterdam. And Kailey, maybe just suggesting that there could be a little bit of life left still in some of these pandemic trades. Certainly bike ownership on the rise as a result.
Yeah, but maybe not interior home bike ownership as we saw with Peloton over the last week or so, Anna. Now let's take a look at what else we're watching today and through the rest of the week. Today, Italian lawmakers start the process of choosing Italy's next president, and Prime Minister Mario Draghi is a top contender. On Wednesday, all eyes will turn to the Federal Reserve for the latest FOMC rate decision, expected to tee up liftoff in March. Then on Thursday, European bank earnings kick off. We'll hear from Deutsche Bank and UniCredit, who are both reporting. We'll get U.S. GDP data on Thursday and European GDP data on Friday. Plus, throughout the week, we'll get big tech earnings. Microsoft, Tesla, and Apple are all on deck, Matt.
All right, now let's get to one of the big focuses today. Fears of war between Ukraine and Russia escalating. EU foreign ministers gather in Brussels to discuss their response to further aggression from Moscow. Bloomberg's Maria Tadeo is on the ground for us in Brussels covering the European response, and our Washington correspondent Anne-Marie Horton is covering the U.S. response. Anne-Marie, let's kick it off with you. What are we hearing now from the Biden administration on this?
Well, a few developments, really strategic ones overnight. The first would be that the State Department, confirming our own reporting from last week, that they want family members of those diplomats in Kyiv to leave Ukraine as soon as possible. And then there's also an opening of a voluntary departure for U.S. government employees. And we should note, just hours ago, London and the UK Foreign Office took the same step. Now, the State Department says this is really out of an abundance of caution and given the fact that Russia continues these efforts to destabilize Ukraine. And then the second big development is following the president's meeting over the weekend with his national security team at Camp David. The New York Times is reporting that the administration is considering sending U.S. troops to Eastern Europe and the Baltics. This would be everything from aircraft, warships, 1,000 to 5,000 U.S. personnel. And the report says that that could be boosted tenfold. Now, we should note, if the U.S. was to deploy troops on the eastern flank on President Putin's doorstep, this would be a tectonic shift in terms of their response and what's going on right now with Ukraine.
Yeah, absolutely. This would be a big shift in stance, wouldn't it, Anne-Marie? We've already seen, though, Maria, Poland reacting to this kind of news reporting, suggesting any such suggestion would be welcomed by Poland, by the government there. But just how united is Europe? When we think about Europe's response here and what it thinks it needs to be done about Russia's presence on the Ukrainian border, the buildup of troops there, how united is Europe right now?
Well, you know, Anna, that is a big question, and it really is a big question that, in particular, the German delegation will have to answer today in this meeting that's happening in Brussels. If you look back to the meeting in December when European leaders, and that includes Olaf Scholz and Emmanuel Macron, they agreed to massive sanctions on Ukraine. The reality is, a month later, we still don't know what that would look like. And I would also point that it has been really 48 hours of hell for the German External Service. As you know, a German official was caught on tape on Saturday saying that Vladimir Putin deserves respect, also saying that Ukraine should come to terms with the idea that Crimea is gone forever. At the same time, Germany is coming under huge pressure from Eastern European countries saying that they're not facilitating weapons being sent over to Ukraine. So all of the ambiguity that we've seen play out for years between Russia and Germany when it comes to foreign policy, it really is coming to boiling point now.
All right, a great look at the picture on both sides of the Atlantic when it comes to this issue. Thank you so much to Bloomberg's Maria Tadeo and Anne-Marie Horton. And don't miss our conversation with Ukrainian ambassador to the UK, Vadym Prystaiko. That will be in just a few minutes' time. Meanwhile, we have to talk about monetary policy, and the FOMC is expected to signal their first interest rate hike since 2018 later on this week. And Goldman Sachs economists say there's a risk the Fed will tighten monetary policy at every meeting from March. Let's get now to Eddie Vanderwalt from our MLive team. Eddie, we're now talking about potentially even more tightening than is already priced in by the market, but we've seen a dramatic repricing, the worst week for stocks since March 2020 last week. We're seeing futures rolling over this morning, now unchanged on S&P E-minis. How much more downside could we see?
Yeah, absolutely. Look, the market is really buying into this really hawkish narrative. The market's eaten that up hook, line and sinker. And, you know, we will see whether the Fed actually follows through on this, because, of course, there is a feedback loop from the markets, right? So if we see continued downside in the stocks, the Fed and other policymakers may just get a little bit nervous. So I think we will see, and certainly this week's meeting will be absolutely key in showing us just how much the Fed is willing to follow through.
I have been really impressed with your macro view column, Eddie, explaining the supply-demand differences in Bitcoin compared to almost everything else in the world, right? Since it's limited in a way from Satoshi or unlimited in terms of the way it's produced, depending on how much output is in force around the world. What do you think about this price drop to $34,000, and how much further could we fall?
Yeah, to the point of that piece, thank you very much for that, Matt. But I think that the point of that piece was that, supply, because supply is fixed over time, we don't see supply react when there's a big change in sentiment about the cryptocurrencies. So when we see sentiment change, the price has to react a lot more to bring to meet with demand. So I think that's a really interesting dynamic in the cryptocurrency space, and that's what makes it so volatile. Now, look, if we see tech drawdown, I think Bitcoin continues to be a high beta play, even on high beta tech stocks. So the drawdown in crypto can be substantial.
It can be substantial. Eddie, thank you very much. Yeah, Bitcoin's correlation with US stocks reaching an all-time high. I know a lot of people on your team writing about that as well. Thanks very much to Eddie van der Welt from the Markets Live team. Thanks to him for joining us this morning. Now to a flurry of deals and activists news this morning. Nelson Peltz is building a stake in Unilever. Peloton is set to face calls from an activist investor to fire its CEO, and department store retailer Kohl's is fielding interest from two suitors. Let's get to Bloomberg's Danny Berger to wrap all of this news flow together for us. Danny.
Yeah, Anna, first let's give a shout out to the Bloomberg Deals team who, as we can gather from what you just said, have had a very, very busy weekend. Now, we've had a lot of high-profile activist investors stepping in. Really, the common thread throughout all of these is it's a more volatile market. It's harder to make returns. So these investors who are smelling investor discontent are seeing an opportunity. Kicking it off with Unilever, who certainly had its fair share of investor discontent. Last week saw its biggest decline since 2008 after its CEO announced that it was going to go after JSK's consumer unit. Now, it's clear there's some questions over strategy because, as you said, we've had Nelson Peltz step in, that's Tryon Capital, and potentially push for a breakup. This is, of course, according to people familiar. Now, it's not just Unilever, it's not just Europe, it's in the U.S. as well. Peloton discontent there after disappointing earnings reports that the CEO would look at stopping production, laying off some of the staff. Well, now Blackwell's apparently is also looking to get more active in the stock, potentially pushing for a firing of the CEO and a sale of Peloton to another tech giant. We're seeing Peloton push higher in the pre-market session after a large tumble last week. Again, it's a theme of investor discontent. Now, Kohl's, this is the big U.S. retailer, has had its fair share of issues, not just recently, but really over the past few months. And we've had a lot of investors continuing to call for a sale of Kohl's. Well, more investors stepping into the fore, ready to take that mantle. We just had Sycamore Capital offer to buy Kohl's. That comes just a few days after Star Value also stepped in, saying that they would buy Kohl's for about $9 billion. So lots of potential deal news. But again, it's all about finding that opportunity in a very volatile market, Kailey.
All right, Bloomberg's Danny Berger with a great roundup of a few of the company stories we're watching this morning. And let's take a look at some other stocks we're watching in early hours in pre-market trading here in the U.S. A big downside mover for basically anything that is tied to cryptocurrencies. Matt was detailing the losses we have seen for Bitcoin over the last week or so, and that is bleeding through to some crypto-related equities like Coinbase, which is down about 7 percentage points in early hours. Another stock moving to the downside is AMC, of course, the movie theater chain that is also a very popular meme stock, could be heading for its 8th consecutive day of losses. Already down about 21% over the last 7 days. It's lower by another 5.5% or so this morning. And then I also wanted to point to shares of Apple, because on one hand, you did get some news that would be good for Apple, and that Han Hai, which is the primary assembler of iPhones, talked about an unprecedented first quarter, which would indicate really, really good demand for Apple's main product line. But that stock rolling over in pre-market trading, now down about 0.6%, as we've seen a rolling over in sentiment for U.S. futures more broadly, Anna.
Kailey, coming up next on the program, then we'll speak with Ukraine's ambassador to the UK about the latest tensions in the country, and we'll also cover the markets conversation with Kokou Agbo-Bloua, head of UK research at Societe Generale. We'll get his perspective on the equity sell-off, plus more on Ukraine with Julie Norman, lecturer in politics and international relations at University College of London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. European Union foreign ministers will discuss Ukraine with US Secretary of State Anthony Blinken today after Washington ordered family members at its embassy in Kiev to leave due to the threat of Russian military action. I'm pleased to welcome into the conversation the UK ambassador to the UK, Vadym Prystaiko. Ambassador, very good to have you on the programme. Thank you for joining us. We should, of course, continue to mention that Russia says it doesn't plan to invade Ukraine. How do you respond when you hear those comments and you see the troop build up at the border? How do you respond to Russia on that front?
Obviously, we don't believe what Russians and Putin is saying, just not because he's on his own territory, which he's claiming. But problem is that we're missing the point that he's been in Ukraine and was fighting with us for last 7 years. We're not going all the way in the history, but this 7 years already costed us more than 13,000 people dead and 7% of territory. So why would we believe him right now?
OK, and in terms of the Western response here, Ambassador, perhaps you can give us your insights into what is being discussed and what is being planned. Other media outlets are reporting that the Biden administration is weighing sending thousands of troops to Eastern Europe and the Baltics. Is that something you're aware of? Are you aware of conversations like that taking place?
We are aware of these conversations. We understand that NATO is reinforcing its borders. That's very right for the family of these nations united in defensive bloc. The most important question for Ukrainians right now, which are observing that troops have been massing around their borders, is how Ukraine can be helped right now. And that the United States response from our Western partners, United States, UK, NATO at large, that's the support we have, first of all, political, then the economic support, and some of these nations went as far as providing us with defensive weapons, for which we are very grateful right now at this particular moment.
Do you need more military support in terms of weapons, in terms of aircraft, in terms of even advising troops?
Very unfortunate to say that we need more in more or less everything. Now, when we are covered with the anti-tank threat, the missiles and everything on the ground, we still see the gaps in our air defense. We understand that Russians can come through the Black Sea and the Sea of Azov, where we lost our fleet when the Crimea was taken out from our hands. So this is somewhere we have to find out our collective response. And first of all, that's Ukrainians. What is important inside Ukraine is unity of people to defend their own land. We need means to do so.
What do you believe, Ambassador, that Vladimir Putin ultimately wants? I mean, do you think Russia's after a complete takeover of Ukraine, or do you think, as some have speculated, that he's just looking to occupy a corridor to Crimea?
Unfortunately, that's everybody's guess. I mean, what he really needs, what is in his own head. Some people would argue that he's trying to reestablish the glorious Soviet Union, which is, by the way, this year is 100 years anniversary of formal formation of the Soviet Union. Some others will tell that he is trying to make us back and force us back to the table of negotiations on his terms in so-called Minsk negotiations. Someone will, as you just asked, the people will believe that he is trying to provide the land bridge to the Crimea and supply with the transportation, easy access, and the water. So there are many, many other things. I personally believe that Ukraine poses the threat, existential threat for Russia, not of our actions, but because we are existing independently and the way we are trying to build our society, which is probably for his regime even worse than everything been numbered before.
Ambassador, the UK alleged over the weekend that Moscow is plotting to install a pro-Russian leader in Kiev. Has that intelligence been shared with you?
This intelligence we knew, not everything, of course, because that's a very sensitive part when each and every nation, the intelligence they are doing. But what is, I mean, for us, for Ukrainians, it's not a big news that they try to establish the government which will be better for them. That's what they did with previous government. They paid 3 billion euros just to buy out their loyalty instead of signing the agreement with European Union. And the whole government fled to Russia Federation, our president, prime minister, many ministers. So the Russians will, sooner or later, they will use them. We understood it from the very beginning.
And let's talk about what's going on in Ukraine. Obviously, the U.S. is now evacuating family members of diplomats in the embassy there. If the UK or other Western countries were to follow that lead, do you think that's appropriate at this time?
You're actually very right, because the UK already followed the lead, and they announced that the inessential staff and the family members should be brought back to UK. You know, from point of view of diplomacy, of somebody who was responsible of the diplomatic service of Ukraine myself, I understand this move and I respect this move. People have to protect their own stuff. But the message that's been sent to Ukrainians is very difficult, very tough ones. Ukrainians already on the brink on psychological breakdown because of these masses. And it's not just forces. The TV is bombarding us, all the psychological operations Russians running against us. This is just yet another signal that, guys, the war is probably imminent.
Do you ever think, Ambassador, that Ukraine will join NATO? Do you think perhaps the West might conclude that this would be just something a little too provocative in a country that borders Russia? Is that something that concerns you?
That's what I hear in many nations in NATO. I understand that we are talking about right now when nations are in negotiations with Russians and they don't want to provoke, don't want to, the peace is very fragile at the moment. At the same time, my argument is, when we're trying to tell Putin that we have our own agenda, I mean us, Ukrainians, and the rest of the globe, and NATO included, so we have to prove it by some actions. For example, in 2008, leaders promised that Ukraine will become a member of NATO. And they also told their ministers of foreign affairs to assess whether Ukraine is ready for the next step with a membership action plan. It's been many, many years since 2008. I believe there is assessment, this fair assessment is needed right now. So we tell Putin that you do whatever you want. We have our own agenda, and Ukraine is going as independent nations whenever they like. EU, NATO, you name it.
Thank you so much for your valuable time, Mr. Ambassador, this morning. Vadym Prystaiko, Ukrainian ambassador to the UK, thank you very much. And we should note Bloomberg TV has also invited the Russian ambassador to the UK to join us for an interview. However, they have not responded. Now let's get a look at what else is happening in the world and get your first word news. In China, the city of Xi'an has lifted a month-long lockdown after a coronavirus outbreak was stamped out. Shops, supermarkets, and restaurants in the city of 13 million can resume business. Still, there will be capacity limits, and family dinners will be capped at 10 people. President Biden's chief medical officer, meanwhile, says the U.S. Omicron outbreak is heading in the right direction. Anthony Fauci told ABC News that the surge has pushed COVID infections and hospitalizations to records and will soon peak. But he says that decline will not be uniform throughout the country. British Prime Minister Boris Johnson faces his most crucial week in office. Johnson is bracing for the outcome of an investigation into reports that he allowed drinks parties in Downing Street, which broke pandemic rules. The results of that probe could lead his Conservative Party colleagues to force him out. And Goldman Sachs is promoting Luke Sarsfield to co-head of its asset management business. He spent 2 decades as a deal maker before being named to run sales for asset management. Sarsfield will serve alongside Julian Salisbury. Bloomberg's learned the announcement will come later on this week. So a lot of stories to pay attention to this morning, Anna, but of course we also are paying attention to the markets, and futures have rolled over when it comes to the U.S. session in about 4 hours to go before the bell. We are now looking at S&P 500 futures down about 1/3 of 1%.
Yeah, absolutely. So a real change from the overnight session. I was sitting here earlier on a few hours ago looking at US futures that looked much more positive. That certainly has turned around. All the things we were worrying about last week with the added ramp up in tensions between Russia and the West, that seems to be getting into the market psyche. Let's talk about all of that with Kokou Agbo-Bloua, head of UK research at Societe Generale. He joins us next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And here is what you need to know. The US has ordered family members at the embassy in Ukraine's capital to leave the country because of the threat of Russian military action. An advisory says that security conditions are unpredictable and can get worse with little notice. Goldman Sachs sees a risk that the Federal Reserve will tighten monetary policy more aggressively this year than forecast. Goldman expects 4 interest rate hikes in 2022, but the firm's economists say inflation pressures could prompt the central bank to do more. And deal-making and activists are driving some stocks higher. Nelson Peltz has taken a stake in Unilever. Department store chain Kohl's is soaring after word that it has a couple of bidders. And one investor wants to oust the CEO of Peloton. That is a look at what you need to know this morning. Matt, then, as we head into the start of the U.S. session, what are you focused on?
Well, so much for any kind of rebound in U.S. futures. As Kailey pointed out, we've seen a real turnover here. In fact, if you look at the GIP graph, it just goes up and then back down. Now off about 1/3% for S&P futures. We had a positive correlation between stock futures and bonds for moments, but I guess we're back to the negative correlation. U.S. 10-year yields are headed back down as investors seek the perceived safety of government debt. 172.80 is the level right now. In terms of crude, we're down there as well, which is interesting because we've had a lot of questions about the supply of crude. Is it as much as the IEA says it is 660 million barrels more than we had at the same time last year, or is it less? We know that demand has been pretty strong for crude, so 84.74, it's still relatively high on NYMEX crude. Bitcoin has been very positively correlated with stocks, especially tech stocks. I think MLive blog said it's a 0.7 positive correlation, which is incredibly strong over the past 30 days. Now trading below 34,000 at 33,661. If Bitcoin is any sign as to what's to come for the U.S. trading session, it is not good if you're long stocks, Kailey.
Yeah, not good right now, Matt. And the picture is just getting worse and worse as the session grows older. And as we see those losses for Bitcoin accelerating, we're seeing losses for crypto-related equities in pre-market trading accelerating as well. One of the big underperformers is Riot Blockchain. It's down 12.3% this morning. Already it was down more than 25% over last week alone. So serious losses for the crypto space, including Marathon Digital, which is down about 10 percentage points in early hours. Now, Anna also was talking about some of those deals and activism stories we were paying attention to this morning. On the activism side, one we have to watch is Peloton. Blackwell's Capital reportedly is getting set to push the company to push out its CEO and co-founder and potentially put itself up for sale. Peloton shares were up more materially earlier, but as we're seeing a rolling over in risk sentiment right now, those losses have been cut to just about 0.1% in early hours. A much bigger gain, though, for Kohl's, which is up the better part of 30 percentage points, right now about 28.7%. Of course, you have multiple activist investors pressuring Kohl's to sell itself, and now apparently it has a couple of bidders. Sycamore emerging as a bidder over the weekend, and then you also have Starboard-backed Acacia, which has put up a $9 billion bid for that company. So that stock is soaring in pre-market trading, even if it is a down day for equities more broadly, Anna.
Yeah, absolutely. Lots to talk about then when it comes to the activism conversation. Just wanted to put into context what we're seeing here in Europe in the context of this morning, and just to underline that we are seeing a worsening stock picture as we go through the European session. So European equity markets down by just shy of 2%. The map was all red when we checked it out earlier on, and that still remains the case. Travel and leisure stocks to the downside. Also technology, of course. That's where the focus was on Friday on Wall Street, and that continues to be the case here in Europe, but it is broader. We have concerns around geopolitical risk as well, and that is bringing Russian assets to the fore. So this is the Russian stock index, possibly not the most traded, but we'll look for confirmation from the ETFs in the United States a little bit later on. Unilever, talking of activists, as we were just hearing there from Kailey, there's an activist now with a stake in Unilever. This just after the CEO tried to buy some consumer assets from GSK. That didn't go well. Will this activist be pushing for further shake-up at this business? And the shareholder base certainly likes that story. And Axel, this we talked about last half hour. This is actually a bicycle maker over in the Netherlands, getting a bid from private equity this morning. Matt.
All right, sentiment turned bad quickly. Joining us now is Kokou Agbo-Bloua, head of UK research at Soc Gen. Kokou, you know, it wasn't great coming in this morning, but now we have U.S. futures down pretty sizably. European stocks getting hit hard. Bitcoin's off another 5% today. Investors are rushing to the safety of debt. What is this? Because we knew, I mean, the Biden administration has been telling us that Russia's going to go into Ukraine, and Goldman Sachs has been warning us that the Fed's going to hike at least 4 times. So what's different all of a sudden this morning that's getting markets down, so down?
Hi, thanks for having me. It is clearly a risk-off environment and liquidity, contrary to what happened in 2021, where you had ample liquidity by central banks and government through expansive fiscal policies. Here you're having tightening on both sides. And I think the market clearly doesn't like uncertainty. This is the beginning of the year. There's a lot of P&L behind a lot of these performance when you look at the equity market or the credit market, that investors today, if you look at it from a multi-asset perspective, are essentially losing on their bond portfolios, losing on their credit portfolios, and also losing on the equity portfolios. So it is clearly an environment of risk reduction. And if you add to that a lot of systematic strategies that typically are adding to that momentum, you get a bit of a perfect storm. That being said, if you take a step back, the world hasn't really changed overnight. We still have a very decent real GDP growth. Real yield are still negative, all by less than what they were in 2021, and you still have an environment of decent profit growth. So I think it is a transitory market adjustment to a tightening cycle that has been well telegraphed by the Fed last year.
Kokou, good morning. How would you weigh up the contribution that we're seeing from geopolitical concerns here? Because, of course, we've been concerned about technology shares, valuations there. We've been concerned about what the Fed hiking cycle will mean for tech and other growth stocks for quite some time. Geopolitical tensions have been building. What role are they now playing in this risk-off sentiment we see?
I think they're clearly adding to that mood of uncertainty, because clearly if we have another conflict with Ukraine and Russia, so this is clearly not going to be looking good for gas prices. And the Nord Stream 2 pipeline discussion that was designed or expected to ease the upward pressure we had in the energy complex in Europe. And this obviously will create cost-push inflation, put pressure on profit margins, be a bit of a nightmare when it comes to consumer spending. So this is clearly a bit of a perfect storm, and this is exactly why you have a widening in equity risk premium at this stage.
Well, Kokou, you mentioned profit margins there. Obviously, when we're talking about these macro risks like tighter policy or geopolitics, can earnings come to the rescue?
Well, I've been a long believer in this argument that earnings are acting as a put, so to speak, to or at least a hedge against higher bond yield or discount rate. And at this stage, it will depend on sectors. So last week we had Netflix having less exciting subscriber numbers, and this is, sort of had a major impact on its stock, and it's also having a repercussion on the tech sector. So I think it will be sector by sector. I think commodity-linked sectors and value stocks are more sort of hedged from the earnings resilience than sectors like growth stocks or defensives.
From what how you described the Russia tensions earlier, Kokou, it sounds as if you think they are inflationary. And the Chinese story, some people have described as risking being inflationary once again, because if we see further clampdowns to cut back on Omicron cases, how do you perceive inflation developing through this year then, Kokou? Because those are perhaps two upside risks on inflation that hadn't been foreseen, say, 6 months ago.
Yes, absolutely. I mean, we have been on the camp that, or the view that inflation was transitory until proven permanent. And clearly it is becoming more persistent than expected because of the supply chain disruption in China. Zero tolerance policy against Omicron is not going to help the picture. But in H2, I think inflation market will have to fight against a massive gravitational pull driven by base effects. It will be very difficult to see the same increases in 2021 as we saw in a lot of different commodity markets. That being said, whilst we're already seeing supply chain inflation rolling over, dry bulk index, etc., for example, we think greenflation, which is that inflation related to all the commodities designed for or needed for the energy transition, is likely to be a theme for this year. So think about copper, lithium, aluminum, cobalt, etc., or even fossil fuel and energy, because there's less and less supply of these commodities because of environmental issues. And we think greenflation will be the next form of inflation that will likely be more persistent. And this will be a challenge for central bank and monetary policy, because you could see a conflict between governments likely to try to protect their consumers or population for higher prices, and then central banks forced to tighten monetary policy.
Okay, inflationary pressures from Russia, from China, and from greenflation. Thank you so much, Kokou. Good to speak to you. Kokou Agbo-Bloua, head of UK research at Societe Generale. Thanks for joining us. Coming up on the programme, we'll focus more on geopolitical risk. Julie Norman, lecturer in politics and international relations at University College of London, joins us shortly. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, AT&T Communications CEO Jeffrey McElfresh. That's at 1 p.m. in New York, 6 p.m. in London. And this is Bloomberg.
My guess is he will move in. He has to do something.
In this kind of circumstances, we have to be ready for everything.
If Moscow chooses the path of further aggression, we will impose swift and massive costs.
The Russian side is aware of our determination. I hope they also realize that the gains of cooperation outweigh the price of further confrontation.
Any use of force against Ukraine will be a severe and serious strategic mistake by Russia, and it will have severe consequences, and Russia will have to pay a high price.
It is going to be a disaster for Russia if they further invade Ukraine.
We don't threaten anybody with anything, but we do hear the threats addressed to us.
World leaders speaking on the Russia-Ukraine tensions. Joining us now for more on the latest in geopolitics is Julie Norman. She is lecturer in politics and international relations at UCL. Julie, the headlines continue to cross just out of the Sydney Morning Herald. Australia is now telling its citizens in Ukraine to leave. The U.S. also has done so with family members of diplomats. We were speaking with the Ukrainian ambassador to the UK earlier, and he says that kind of action just signals to the Ukrainian people that war is imminent. Is war inevitable in your view?
Well, what I think we've seen this morning going into this week is a bit of a shift from the simple do not provoke approach that we saw from the Biden administration and from allies more broadly up through last week. And to be sure, diplomatic efforts are still continuing in full force. Secretary of State Antony Blinken met with his Russian counterpart on Friday, and those conversations will be ongoing. But what we also heard from the administration over the weekend and today is that they are going to start pushing for more of a deterrence and a potential defense response as well. So we've already seen the shipment of further U.S. defense arms to Ukraine at the end of last week. Going into today, we've seen the call for, again, non-essential embassy relatives and American citizens and other citizens to depart Ukraine. And we're also seeing some, at least considerations to the administration of deploying troops not to Ukraine, but to other NATO states. So a lot more options are on the table right now and are being discussed more openly than they were at this time last week. So what we're hearing from the administration is not that invasion is imminent, but they are going to be ready for anything, and they are going to move a little bit more just beyond the diplomatic meetings that were happening in the past.
I wonder what kind of sanctions we'll see in the case of an invasion. The Biden administration, President Biden seemed to imply he thinks Putin is going in to Ukraine. If that's the case, don't we need to move beyond sanctions like, ending SWIFT transactions? I was reading about the blockade of Germany after Anschluss, and at that point, the Allies stopped sending minerals and resources into Germany. But I guess, would Germany, for example, stop buying gas from Russia if it invaded Ukraine? Could they?
Well, you point out some great points, Matt. And to begin with, the U.S. administration is very clear-eyed about the fact that sanctions would need to go much further than they have in the past. And financially, that might include cutting off some of the major Russian banks from the U.S. financial system, which would, of course, devalue the ruble and increase inflation very quickly in Russia. And we also heard reports again from this past weekend that the U.S. is also considering more export controls, especially in the sense sense of really cutting Russia off from any U.S.-made or even U.S.-designed semiconductors or microchips that would be necessary not only for consumer goods and smartphones, but also for aviation, for military and defense sectors, for some of the high technology areas that Putin's very interested in. So those are some of the sanctions we're hearing discussed. Again, on the European side, it's a little bit trickier. Obviously, Russia imports about the EU imports about 40% of its gas from Russia. So the stakes are a little bit higher for Europe, and that is one thing that, again, the U.S. and NATO allies
Julie,
are
is it wrong to say
negotiating.
that Europe is essentially funding part of this effort from Vladimir Putin?
Oh, I think that would be going a bit far, of course, but in the sense that there are just different interests at stake for Europe, and that's just the reality of the geography and where Europe is reliant, and especially at this moment when we see energy prices rising, we know gas prices are going to rise. Russia and the EU are both very knowledgeable about the situation, that there is that sense of dependence there. That is a bit harder for them to lean into these same sanctions that the U.S. is going to want.
Julie, in terms of you mentioned the defense response. We're seeing this being reported by other outlets, perhaps a change in tactic from the Biden administration there, or being more considering further action there. If it were action to reinforce current NATO territories, would that be seen as a stepping up by Vladimir Putin, do you think? Would it rightly be seen as a stepping up?
Well, that's certainly the danger, and that's why the administration is trying to play this carefully and find the right balance. So one of the demands or requests, if you will, from Putin initially was that there would be a withdrawal of troops from the Eastern European NATO states, so especially Poland and the Baltic states. So by making this even potential move of actually increasing that troop presence, it's doing the exact opposite of what Putin already saw as a security threat. So it's a very classic security dilemma where what is seen as a quite clear defensive move by one side or one party is seen as a very offensive move by the other. So trying to balance that, but at the same time trying to not give in to Putin and kind of stand back up to some of these demands, as well as at the same time as negotiating some of the other things that are on the table through the diplomatic front.
Julie, thanks so much for joining us. Good to get your perspective. Julie Norman, lecturer in politics and international relations at UCL. Coming up on programming a little bit later on Balance of Power, in fact, Valerie Jarrett, former senior advisor to President Obama. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Anna Edwards in London. Tom Keene, co-anchor of Bloomberg Surveillance,
Nailed that,
co-creator of Bloomberg Surveillance, joins us now. And Tom, it's really interesting to watch sentiment really turn down. I mean, when we came on air, S&P futures were up, and now we're down 0.6%.
Yeah, you're dead on, Matt. There's been an abrupt change, folks, in the last, I'll call it 45 minutes. We're searching for this. We just talked to Maria Tadeo in Belgium. The news flow extraordinary. And I got to be honest, it lines up, it triangulates, Matt, on the screen of the tensions of Ukraine. When I do that, I look at gold. I look at Swiss franc, I look at US dollar. These are predictable markets that indicate that angst, and it comes right over, as you point out, to the equity markets. The VIX out 2 full points near a 31 level.
So geopolitical angst, Tom, what about monetary policy aids? Jan Hatzius over at Goldman Sachs saying we could see a hike in every meeting from March. Do you think we get a signal of that this week?
I think there's a raging debate out there, and it's going to recalibrate. The note of the weekend was Mike Wilson playing off Game of Thrones. He said winter is here.
Yes.
And, you know, I just think it's hugely fluid right now. I'm not in the game of counting rate increases, but you go from Steve Englander 2 rate increases out to the sequential steps of Goldman Sachs.
All right, Tom Keene, co-anchor of Bloomberg Surveillance and Game of Thrones fan. Thank you so much. I, too, must say I am a fan of Game of Thrones. I am also a fan, as you know, Matt Miller, of NFL football. So I had a pretty good weekend watching some very exciting games. They were all really close. But the Bills-Chiefs last night really launching into a major debate about whether the NFL needs to change its overtime rules. If the first team to get the ball, decided by a coin toss, scores a touchdown, they automatically win. You don't get a chance to answer, and that is exactly what happened with the Chiefs' victory over the Bills last night. And I gotta say, Matt, it really doesn't seem fair. I feel like they need to go to the college football model.
Yeah, I mean, my WhatsApp group on NFL blew up last night. It was just unbelievable. I woke up to 91 text messages. Wow. And that's it. I only have like 3 friends, so it's incredible. And I think the rule change needs to come for sure. I'm watching markets. This, winter is here, quote from Mike Wilson over at Morgan Stanley, seems appropriate as we watch futures just come up and turn down. Here's a great GIP one-day graph of what we're seeing in S&P futures right now. But as Tom said, look across risk assets. You see a big jump in the dollar. Gold is up at 1840. The Swiss franc is getting a bid. Even the yen, to some extent, is getting a bid with the jump against the dollar. So it looks like investors are really running for safe haven this morning as we head towards the U.S. Open, Anna.
Yeah, absolutely. And one of the things that's causing such tension and running for those safe havens is, of course, what's going on in Ukraine. So let's just flag what we're going to expect to see today. European foreign ministers are going to be meeting. Maria Tadeo on the ground for us in Brussels with that. We should also get various briefings then from foreign ministers in attendance and maybe from NATO as well. We understand that Anthony Blinken is going to be briefing the foreign ministers on the U.S. perspective. But to what extent do we get a unified voice coming through from Europe? Can Europe land on the same page in terms of their response, their planned response, should Russia decide to invade Ukraine? The UK also pushing for some sort of G7 meeting and response around this. Now, more Bloomberg Surveillance is ahead. They will continue, of course, to track the geopolitics. We'll be hearing from the ambassador of France to the United States, among other voices. This is Bloomberg.